What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic. Today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended on Friday, and where price is likely to head into next week. Earnings is done. We have FOMC around the corner, and so there's still going to be a lot of volatility in the market as we still continue to be in earnings season, even though Tesla's earnings are done. We got those earnings and the market did not like what it saw. And we had a nice big sell-off during the week and a nice big sell-off Thursday into Friday. So let's take a look at what the chart's saying before we get started. Don't forget to check out the link in the description below where you can find the Rawstocks Discord, the Traders Helping Traders Discord. Currently, there's some promotional deals going off on premium for Rawstocks. If you want to upgrade, use code only10 and you can get 30 days free trial on the Rawstocks Premium Discord where we have the custom Rawstocks callouts. And trade signals, we have market education, we have private Discord community for chatting, as well as a current book study that's going on just for premium members. Either way, if you don't want to upgrade to premium, you can click the link, you can join the community for free. There's no obligation to pay anything, just to be a free member of the Discord and hang out with other market traders during market hours. So let's take a look at the charts. If we look at the weekly chart, we see a series of lower highs and lower lows. And you can see as we deliver on liquidity to the sell side, in each case, we deliver on our liquidity target and we end up seeing a rally from that point. Okay, down here, we trade down into a fair value gap. We also see in the highlighted gray area here, this is a 1 hour liquidity target that was taken out in this move down. Right? Then we rally up to a weekly order block to liquidity on the buy side. We sell the sell side, taking out the lows. Then we see a rally up to buy side, and then now we've seen a sell-off down to sell side. We've taken the lows, right? So there is a decent chance that we are going to see some kind of bounce soon. The only other low liquidity target to the sell side is that swing low there, the order block here, and then we have some fair value gaps. But currently, as we sit, we traded down to that fair value gap where current price is, where price ended in this week. And so that also is a decent chance for us to catch some kind of rebound. We'll look on a lower time frame chart what that might look like. But beyond that, again, there's no real fair value gaps here. This is all kind of balanced price range. And then we have, this rejection block, if you will, in this small doji. That could be swing liquidity. If we were to head lower, that's down at 152.77. Are we going to take that all at once? I don't think so. I think we're going to see, again, if we look at the structure of this, every time we've delivered to our sell side, we've seen some kind of rally, and this week we delivered through sell side again. And so maybe we get a small week like this where we try to push up. We ultimately get some kind of doji before we get any kind of meaningful bounce. Or we could have something like this where we saw a nice big candle, we gapped up, and then we just rallied from there. So we'll be watching to see what happens. We could see something like this over here as well. Where, we had our sell-off candle and then we kind of trickled down the next couple days or the next couple weeks because these are weekly candles. 1, 2, right? Maybe bring us down. Maybe we catch a rally off FOMC. We'll just have to wait and see what that brings. But we could definitely see, a week or two more trading down, right? Maybe into this block here and then see a rally from there. But we are looking like we're approaching some kind of bottom, at least a short-term bottom. Whether or not we continue to attack sell side is a different story. But the fact that we've drawn on liquidity and we've taken, the liquidity that rests in these candle wick lows and we're in this fair value gap would be a decent place to see some kind of bounce and reaction. Even if it's a bounce and we still don't get a candle close above the weekly open, we could still see a move up and then a further continuation to the downside. Something we want to be watching is we want to be watching these weekly candle wick highs. The first time we invalidate one of these wick highs, Okay, that's our confirmation that we're likely to head higher at that point, and maybe not even higher than this here, but just, if we get a weekly close or even a wick above this wick here, then it invalidates it, because you can see on all these weeklies, right? We continue to set lower lows on each weekly candle, right, and lower highs on each weekly candle. So we're going to put out our range here. And I'm going to delete this fair value gap. I don't really care about that right now, but our weekly range here. Right? And so if we're going to continue to be bearish, we do not want to see this high of, and it's pretty high up there. I mean, it's 218, right? We're pretty far away from that. But we don't want to see that high even wicked above. That's going to invalidate the series of lower highs on these weekly candle wicks. Okay, and you can do the same thing on any time frame. But once we wick over that 218 mark, I do anticipate we will attack some additional buy side and then probably back up into one of these order blocks right here. Let's drop down into a one-day chart. On the daily chart, we have that gap. We have that inside day, right? Price did not want to continue to move lower. If you see here, again, our weekly levels, we're not seeing those invalidated. And even here, we see a series of lower highs, but then you get here and we pushed up, right? And that invalidated this candle. So we could have been looking for some kind of bounce there. We ultimately didn't get it because of earnings. But this is certainly a first sign that price might be wanting to make a change in a different direction. And then we try to get that candle push up, and then this wick here, right, that went above there. Ultimately, earnings made the decision where we dumped down. But we can also look at Thursday's trading range, right, which is 193.25 down to 180, basically 179.97. And we can say heading into next week, if we break above this 193.25, we will be looking to fill this gap, whether it happens in 1 day, 2 days, 3 days. We'll just have to see. But if we break above this, I do anticipate we're going to probably at least come back up to this wick 207. But if we break down below the low of 180, I do anticipate that we might try to continue to attack some of this sell side liquidity. We had, our close of the fair value gap there on the weekly time frame, and then we have ultimately the 152.77. And you could say that there's additional targets on the daily time frame of sell side right there. And then we have a breaker block that could act as mitigation and keep price from heading lower. And we are right about at that level, 177.58 to 167.27. But we could see price draw down into that and see that breaker act as mitigation, where it doesn't allow price to run below and take the additional sell side. And then we do catch or bounce out of there. So a lot of things coming up, and a lot of things that, like, our liquidity targets mostly have been exhausted. We took all of the sell side in this range. We took below the swing low here, right? And so now what we're looking at, we have this fair value gap here. We have our daily breaker block here that could act as mitigation. And then we have our swing lows of this this range here being external, but also internal liquidity to this bigger range here. Right. And then if we get below that, then there's another story that we'll be talking about. But then we're looking at all these gaps in here. We're looking at a breaker block here. We're looking at a order block here. Ultimately, the swing low down at $100. But we're not there yet. So we'll see if and when we get there. But right now, our nearest targets is last week's low, breaker block, possible mitigation block, and then additional sell side liquidity targets down below 164.26 to 152.77. If we start breaking again into this breaker block and we see that give out, then we surely will be attacking the additional targets. If we look at RSI, we see we're very oversold, but we also know that an oversold reading could still give us a bounce on RSI and a lower low on price and a higher low on the RSI. Giving us bullish divergence, and then potentially looking for that rally up a little bit, at least to fill the gap fill there. Let's drop into the 1 hour time frame. On the 1 hour time frame, we have the same targets if we're heading up, but we also see on the 1 hour time frame we don't have The gap to fill, if you're using pre-market data, you can see that we just have this nice sell-off. And so what I'd be targeting is I'd be targeting this fair value gap here as kind of our initial target. We know that that's going to be magnetic and it's going to want to pull price in eventually. Whether that's right now or not, we will see. First thing we got to do is get over this range, right? We got to get over that high from Thursday or get below this low from Thursday as well. We are in a consolidation, so we might look for, and this could happen early on, we might look for, as we see this consolidation setting up, we might look for a quick delivery, right, to hit that breaker block that we talked about, and then see us rally up from there. That could be a likely target, right? We see a consolidation. We'll get some kind of dealing range there, right? And we'll end up with a fair value gap that we could look at. If we take the low first like that, and then we pop up, it's more likely our structure is going to look something like that. But if we stay in the range and we take the high first and we take the low, we might actually look to enter a short here as we potentially come back further into the breaker block. So it's going to depend a lot on what pre-market structure looks like and then the early moves out of Monday. But I would still expect that we'll break outside of this consolidation range from the end of Friday. And again, that's an hourly. If we drop into the 15-minute chart, our RSI starts to tell a much different story. It no longer looks like it's so oversold, even though we've come off this big sell-off. Saw some relative strength going into the end of the day as we caught a little bounce. Again, we're still looking at this range. This range is going to be very important till we break above 192.79. There's no chance, obviously, that we're heading to this fair value gap, and there's really not a lot of targets. I mean, you got this Friday high at 186.57. That'd be our first look at breaking that. Let me turn it back to black. So on our kind of intermediate or shorter term time frames, we're looking at 186.50, give or take. And we're looking at breaking below the 181.88 or 182, we can call it. Again, that kind of consolidation range that we saw Friday and trading into the end of Friday's trading session. So first we'll look for that 186.50 or that 182 to break below or above. And then we'll look to target 192.79, or on the downside, we will target previous low at 180. And then again, the breaker block starting at 177.60. Same thing is going to show up on the lower time frame charts. Only thing I want to mention on the lower time frame charts is, again, your smart money, trade setups. So let's look at Friday's trading session. We're going to throw on London pre-market range. This is not the entire London range, but we do get some of it in the pre-market. And so what I want to notice, or I want you guys to notice, is that trading into market open, okay, we see a run above London range, and then we get our market open at 9:30, and we kind of run out this consolidation range right here. So if you look at that being a consolidation range, okay, we run the stops out, and then ultimately we run down from there. Okay, that clears out the liquidity that was in that range. Then what we want to look at is the swing high. We want to see the swing low. Okay, we see nice displacement here. We see a market structure shift. Then we see a return to fair value gap, right? I'll draw the fair value gap out for you. There's our fair value gap. And we see price come up into optimal trade entry. So there's our entry, stop loss above old high, target old low right here. And then we can look at our additional Fibonacci levels to target even lower. And you can see eventually wrong low. There we go, that low. Oh, no, it is this low. So you can see we hit our take profit 2, but we did not continue on down to take any additional take profit levels. But that was our optimal trade entry there, and then again, we run it down at least to our previous low. We also run it down right to London low, which is something we look at, is London high and then London low to get delivered on. Doesn't happen every single time. Last Thursday it didn't happen, but we did show some examples last week of how it happened quite a few times over the previous week. And then this week again, traded above London high, targeted London low or pre-market low. And you can see nearly hits it to perfection before it finds bounce. And then ultimately we come back down and we take that low by just a little bit. But there's your good smart money concepts trade entry there. And then another second smart money concepts trade entry is an order block entry. And we find the last down close candle there. And you see price comes up, price comes down, order block. Order block entry is a low risk entry point because you set your stop again back at the previous low, just right below. In this case, we were at a fib level entry. In this case, it's even a better entry, right? So what are we targeting? We're targeting buy side targets. And so I see buy side targets. I don't see any big fair value gaps here based on displacement. So what I'm going to look at is I'm going to look at order block here. And then you can see we trade up into that order block. So we targeted a previous high, but specifically the block itself. Consequent encroachment, or 50% of that block, is a really good target. You can see we trade right up to it. We fall short, we trade right up to it. We trade up to it and find some resistance. Then we ultimately run the stops out on these highs before we come back down lower. But really nice trade setup there as well. Also in the time frame that we're looking, taking the trade before 11 a.m. New York time. And again, on this, we're coming from sell side. We've already taken sell side. We're targeting buy side liquidity. And we're also in, a bearish narrative where we are trading below opening price. And so when it pops back up here, you could also look for an additional short entry. But at that point in time, you're after 11 o'clock or you're starting to run out of time. So may not be the best idea, depending on what session you like to trade. I prefer to trade the New York AM session, and so that would be outside my window. But there's two really nice smart money concept setups specifically on Tesla. And so hopefully this has been helpful. Don't forget to like, subscribe, share with all your friends. Good luck on the trading session this week, and we'll see you guys on the next one.